exciting for me is just doubling down on everything that works. So we're doubling down on investing in the best YC companies, and we're doubling down from creating content and becoming big and bigger media and just, showcasing YC founders, telling stories. Yeah, that's it.
Welcome to the Hot Start VC podcast, the show where we break down how celebrities and creators build billion-dollar brands. In today's episode, I'm joined by Gabriel Jarrosson, a French engineer turned YouTuber turned investor who built one of Europe's largest angel syndicates and now runs Lobster Capital, a VC fund that exclusively invests in Y Combinator startups. After launching his YouTube channel in 2017 to share his investing journey, Gabriel grew a loyal audience and built a community of over 900 investors who collectively deployed $36 million into nearly 100 startups. We'll talk about what inspired him to start creating content, how it helped him build one of Europe's largest investment groups, and why building distribution has become one of the biggest competitive advantage in venture. So without further ado, let's get into the conversation. Gabriel, I'm excited to have you on the show. Thank you so much for being here.
Scott, I love it. Thanks for having me, and let's dive in.
Perfect. So before investing in startups and also creating content on YouTube, can you tell me more about your background and what you were doing before that?
Yeah, I studied computer science engineering. Didn't like that so much. So even before studying, when I was a young kid, I was already an entrepreneur, or more actually wanting to be an entrepreneur. I'm not the kid that set up the lemonade stand or whatever, but I was sort of dreaming about building a business. I learned to code pretty young. And so, then I did the regular school and went to engineering school and then started businesses while I was studying. Engineering was not really my cup of tea, but started businesses. Then I graduated and did, kept doing businesses and businesses. Lots of failures, lots of learnings. I was probably not a great entrepreneur, or at least I was very young and inexperienced, and I was doing several businesses at a time, which is a perfect recipe for failure. But that allowed me to learn a lot of stuff about startups and building companies and what works and what doesn't. And that's what ultimately led me to investing. I thought, hey, after failing so many times, I still sold 3 companies, not massive exits, but that gave me 2 things. One, gave me cash to start angel invest, but also gave me credibility towards other founders. So I thought, I've done all the wrong things myself. I recognize patterns in other startups. Sometimes I think they're going to fail just like me. That's the way you learn. But sometimes I would see people much better entrepreneurs than me, navigating better and not doing the same mistakes. And I thought, okay, those people are onto something. I want to invest. So that's what I was doing before, what I'm doing today.
Yeah, I love investors who have been founders themselves because they can really resonate with the founder. So I think it's a big edge. So you sold your company and you started angel investing. And then in 2017, you started creating content on YouTube. What inspired that?
It's so funny. I was living in Shanghai just for fun and starting my next business so when I sold my first business, I moved to Shanghai just for fun. I was young, I was single, it was fun. And I contemplated starting another business in China, but I didn't speak Chinese. You have to relearn everything. My first business relied on SEO a lot. And so there's no Google in China. So I was like, okay, I'm going to start a business in France. I should have said the US, but I'm going to start a business in France. And one day, I'm running the business from China. And one day I was angel investing on the side, and I find a Facebook ad for ClickFunnels and the book Expert Secrets and the webinar. And basically what Expert Secrets, the webinar, and the book say that I buy the book and I read it. It says, you have an expertise, you're an expert in something, and you can make a business out of that. And I'm thinking, okay, what am I an expert in? And I've been doing more and more investing at the time. So like, okay, maybe I can start a business in investing. And I start this investment club, but I don't start the creating content right away. But I look at everyone who's doing what's called at the time infopreneurs. So, you have a knowledge and you're trying to monetize it. Do you find clients? And I actually find a lot of people having success on YouTube. And so one day, I started this first business, which makes me explore how would you create an infopreneur business. And then one day I find a webinar on how to start your business in 2017 with YouTube. I'm like, okay, I'm going to register. It's a free webinar. And it's a French entrepreneur. And in the webinar, he says, 2017 is kind of late to start the YouTube game. It's really funny when you say this in 2025. But 2017 is really late to start in the YouTube game. But I guarantee you, if you publish 1 video per day for a year, your channel will explode. And I believed in YouTube already a lot. I had done content before in my business that I was managing. I was teaching courses online. So it was very easy for me to do this, pull up a recording on my screen and just record myself. I said, okay, I'm going to try it. I'm going to make a video per day for a year. And it was in French. That's a mistake. Then I do it now in English, obviously. But it went so well that after a year, my channel did or had exploded indeed. Then I said, okay, I'm going to go at it for a second year. So I did for 2 years in a row, 1 video per day. Short videos, 5, 10, 15 minutes. Not a lot of editing, just me taking the mic and telling a story, or not telling a story, but like talking about one specific thing. And yeah, that's, the rest is history.
I love that. And what type of content exactly was it? Like, what were you talking about?
So again, I was exploring, honestly, at the beginning and trying to monetize my expertise as an investor, mostly as a startup investor. So I was talking about startups, what I see, what I do, how I look at a startup. Sometimes I would just take a pitch deck and record myself reading through it and be like, oh, I like this, I don't like that. This is a question I want to ask, stuff like that. Then people started asking me, there's those platforms of crowd equity, of startups that raise money online. So, in the US, we have WeFunder and Republic and stuff like that. So people are like, hey, what do you think of those? So I would make videos on those. I would record my screen and be like, okay, I'm on the website, they're raising, here's the red flags, here's why yes or no, etc. And then I monetize that by saying, hey, if you want to know which ones I invest into, which ones I don't, and why, and I can recommend the ones that I invest in and why, etc., you could come into my private club. It was a paid membership, make money out of that. But I was exploring. I was also doing videos on crypto, because 2017 to 2020, crypto was very hot. And so it was always when I did videos on crypto, it would get lots of views. I did videos on the stock market. Sometimes I would just take a stock and be like, hey, should you buy Coca-Cola today? And just do a 10-minute analysis of Coca-Cola. Again, exploring. After a few years, the videos that got the most views were the crypto ones, but where I really wanted to focus my time, my energy, my business was the startup world, where it was really unique. There's a lot of people doing stocks and crypto. There's not a lot of people doing startups. So I just focused on startups and then only did videos about startups.
Yeah, and talk about that investment group. Like, how were you able to monetize that?
So one of the first ideas was this. So I was doing those videos and then people were asking me, so are you investing or not? I was like, the answer is for the private members. I, pay a yearly membership and I'll just be the filter for you. I'll go through all the websites, look at all the companies and just pick the ones that I think are good, that I trust, because I already had the background as an angel investor myself and did quite well. Then I had the credibility. And people are like, okay, you know what you're doing. You've been doing it for years. You're doing it well. I'll follow your advice. That's the first thing. But of course, I wanted to do my own deals. So as an angel, because my 3 exits were not massive, I didn't have a lot of cash. So many times the startup would say, hey, Gabriel, you're great. We love you. You're an entrepreneur. You have experience. You're creating content. We're happy to have you. But the minimum is 100K. Because we're raising 5 million, or the minimum is EK. I was writing much smaller checks, like 5K sometimes. So that was a problem for me. I would miss out on some deals. But then some people were like, hey, you have some private deals that are on other platforms. Maybe you could share them with us. And so that's when the idea for what became the private club and the angel syndicate was born. Was, hey, what if I had people join this club where I would share deal flow that's mine, proprietary, that doesn't come from the platform, deals that I actually source myself. And at the time, it was mostly European with my network. I was still living in France. And I started to say, hey, the first, 10 or 15 people were free. It was friends, acquaintances, family members. But then I was like, hey, I tried. I say it's a paid membership. You want to see my deals, you're going to pay. I started at 500 euros per year. So very cheap, but you pay upfront 500 euros. And then for 10 months, you're going to see all my deals. And then that's what I started to, again, I experimented with a lot of things on YouTube, but that's what I started to advertise on YouTube. And now I started in October 2017. So 1 video per day for 2 years. You make it to October 2019, just before COVID. I have 700 plus videos on the channel. The audience is growing and I have this club now. And I start to advertise it more and more and more and more. And actually people are starting to join. And I start to increase my price. So it's 500 per year. Then it's 1,000 per year. And then people keep buying. And then I make it 2,000 per year. And then people keep buying. And then COVID happens and everyone goes to YouTube and people have money and they don't know where to invest it. So people join. I get from 10 people to 50 people to 100 people to 400 people in the club. And so at the peak, there were around 400 people and the price was up to 4,000. Now, not everyone was paying me 4,000 because everyone was grandfathered. So if you came in at 1,000, you kept your price at 1,000. But it was a good business, but also because I was making money on the membership. But what's really interesting to me, like the membership fees, I didn't really care, was the number of people who wanted to invest, and so the firepower we had was becoming enormous. When you had 400 people, the minimum investment I think was 2,000 euros or $2,000 because we were investing in the US by then in YC. then that's, if everyone invests 400 people times, it's like 800K. So you go and see a startup and you're like, hey, I can raise 800K for you. Sometimes we did more. We did a few checks over $1 million. And the biggest one I think was 1.7 million just from a YouTube channel. Scott, can you believe it? It's crazy. So that was just insane. I was having so much fun. And yeah, I transitioned from investing in France and Europe to investing in Silicon Valley and more specifically YC, which is what I specialize in now. And then, of course, end of 22, early 23, it all exploded. I mean, by exploded, it's still, the syndicate and the club survived, but pretty much everyone left. There's a big interest rates, were going really, really high. People were not investing in tech at all. Silicon Valley Bank went under, and that, created a lot of problems for a lot of people, including problem of trust and faith. So that was a big, big, big slowdown for the Angel Syndicate. That's one of the reasons why I said to myself in 23, hey, I want something that's more predictable over time. That's when I started the fund, Lobster Capital.
Yeah, very interesting story. And like, whenever you started content creation, was it already like quite clear early on that like the investment group, that was going to be the monetization model, or like how far in your journey did that become clear?
No, it was not clear. To be honest, I was experimenting with a lot of things. I was experimenting. So because when you do a video per day, that's really the cool thing is you'll try anything. Because sometimes it's like, I don't know, 4 p.m. and you're like, I don't have a video for today. So I literally have 1-2 hours if I don't want to spend my entire night doing a video, because I was taking it seriously. So you'll do like, okay, give me an idea, whatever, any idea. I just want to do something. So you'll experiment with things. And so, for example, the crypto videos did really well, as I mentioned. And so then I try to have a product in the crypto world, sort of same thing, a group of signals of what to buy, what to sell. I'm not really into trading, or not at all into trading. I actually don't like it. I think it's kind of a waste of time. So I just experimented because I didn't believe in it too much. I think it didn't go far. But yeah, I tried a bunch of things, including in the videos and in the monetization. But to answer your question, when I started, I had almost no idea that this would be, the club existed from before the YouTube, if you recall. So I knew it was there. It was a possibility. Just I was experimenting in case I find something better, something bigger, something, I was looking at a lot of stuff. And then after a long time, probably 2-3 years, maybe in 2020, I guess 2020 probably, I was like, okay, let me focus on startups. Startups is what I do well. It's what I like. I like startups so much better than crypto or stocks. I mean, I've invested in stocks, and I've invested a little bit of crypto, especially at the time in 2017, 18. So I like it. It's interesting, crypto blockchain is a very interesting technology. But then startups, I enjoyed it more. I was unique in Europe to have that access to Silicon Valley. So then I was like, okay. And the business proved to be pretty great, because the price went from 500 to 4K a year, and people just kept paying because it was unique. So it was a great business model. So yeah, I had it from the beginning, but decided to just focus on that much later.
Yeah, and I think that's the right approach. Like, so many times nowadays, I'm talking to content creators, and already on day one, they want to start monetizing and making money. And I'm like, no, you first have to find your content market fit. And if you start to monetize too early, you kind of lose the trust of your audience. Me, for example, I've been creating content for more than 4 years on LinkedIn, and I've been offered brand deals, sometimes also with like a little bit shady companies, but they wanted to pay me like $10,000 for like a post. And I was like, well, okay, I can do that. But like, what is that going to do with my reputation and my engagement and that type of stuff? So only like 4 years later, we started to run like ads. So I think it's really important to first find that content market fit before you start monetizing.
I mean, in a sense, I hear what you're saying and agree. But on the other side, I've seen a lot of people who did just free content. And then the audience, I'm talking about YouTube specifically. You have your experience on LinkedIn, which, is different. But on YouTube, if you just do free content for years and then you start selling something after 3-4 years, sadly, oftentimes I've seen the audience react badly, like, oh, this was free. What are you selling this? I actually think if it's good from day one to say, hey, I'll be doing content, but this is a business for me as well. Like, I'm not doing this, for fun. I'm a businessman. I'm doing this for business. And, if you want the free videos, that's fine. But if you do want something more, then you can pay for my service. You don't have to. It's a funnel, right? There's like 98% of people who'll never pay, and that's okay. But so I've seen it kind of a backlash sometimes. But that being said, it has to be a product that really solves a problem, a real product. It shouldn't be promoted a piece on LinkedIn that of a company that's shady, that's of course the wrong idea. Whether at the beginning or after 4 years, regardless, a shady company, you should never advertise. I know you know that.
Yeah, and I think what's interesting also about your story is that you kind of prove that you can also, as a content creator, build different type of companies than another CPG company or whatsoever. Like so many content creators, they start their own content, they build their audience, they now launch a supplement brand or even a liquor brand. You see a lot of them behind me, but you actually have launched an investment fund on the back of YouTube, So it's also interesting that there's an evolution in the type of businesses that are coming from content creation.
Well, if you think, and thank you for that. And there was an article on TechCrunch that said this, this fund was started by, or this YouTuber started a fund or whatever, because it really is from YouTube. Just to give a sense for the audience, the Angel Syndicate, and then, the video per day for 3 years, etc. That allowed me to invest with 900 investors in total who found me through YouTube. And we've deployed in total 35 or 36, between 35 and $36 million in startups. It's substantial. It's not just from YouTube. And then this first fund that I raised, it was not all thanks to YouTube, but it's a 12 million fund. And now I'm raising a 50 million fund number 2. And again, thanks to the online media that we're building. So it is real business. I think with time, we'll see people build any kind of businesses with online presence or with online media. I'm always reminded of Ryan Serhant, for example, who built a real estate empire just on content. So it's not a tequila brand, but also always want to mention. It's very weird in a sense. My inspiration for this is weird. Is Donald Trump. Whatever, setting aside everything political, but everyone knows Donald Trump would never have been president if he was not on TV. And that's so interesting. At the time, I think it was the 80s. There's no YouTube, obviously. And so you have to be casted. You have to make it on TV. And we can think about all the luck that he had to be in this TV show, The Apprentice, and where he'd led him. He would never have been president without The Apprentice. Today, in 2025, you don't need anyone's permission. You can have your own TV show. It's called YouTube. And of course, it's also meritocracy. If your content is really good, then you'll have the views and you'll build everything. So just to say, again, whatever you think of Donald Trump, he's not extremely popular in many places of the world, but including California. But content leads to anything, including president, including billion-dollar businesses like Ryan Serhant. So yes, the most typical thing is, the guys will start a tequila and the girl will start a makeup brand or whatever, the women. But of course, there's much more. Look at Mr. Beast started a chocolate brand. That's pretty original. And it's going to become even more and more and more diverse.
Yeah, no, I love those examples. And I think Sharon recently raised a $45 million round for his financing real estate platform. So yeah, I love that example. You already talked about a couple numbers. So let's dive into that. So from 2017 to 2025 or early 2025, you created over 1,100 videos. You built an audience of over 42,000 subscribers. And you grew that community of 900 investors who collectively invested $36 million in over 90 startups. Yet you kind of decided to leave that all behind and start with a new, fresh YouTube channel. So can you elaborate on that and what sparked that decision?
I know I'm crazy. I mean, I've decided to move on from that amazing business for a number of reasons, but the main or only reason is I've found something more appealing to me with more potential. It's still in the very same space. I just built an actual fund instead of, doing deal by deal in SPVs where I invest, which is the top 2% of YC startups. So YC is already very competitive. I specialize in the top 2% of YC startups, extremely competitive rounds. Those rounds move so quickly. You can really get in with an SPV because an SPV takes time to set up. It's 24 hours. It's pretty quick, or sometimes 12 hours. But then everyone needs to wire in. Everyone needs to commit and wire in and sign. And then you have dozens, sometimes 100 plus people. And of course, if you have one wire missing from one person, and, I have investors from all over the world. Many are from Europe, but, from Asia and whatever. It's international transfers. It's not on-chain. It's not stable coins, sadly, maybe in 10 years. So if you have one wire that's late, you can't close. Because then if you want to close, you have to change the document with a lower amount. Then the money still arrives the next day. You have to refund. It's a mess. With a fund, you have the money, you sign, you wire, boom. Okay. And so when I was doing this SPV business, this club, I was missing out on some amazing deals because I would say, hey, I can get you the money in a week to 10 days. The best deals were sorry, we're closing tomorrow. And it's not fake. They're really closing tomorrow. So that's, probably one of the biggest reasons that I decided to leave it all behind. I decided, but also competition for those deals is very hard. Everyone wants to get into those deals. The fact that, again, like when you create content, whatever it is, whether it's me or, Ryan Serhant or Donald Trump, whoever, you can't even think of the externalities that it brings. Like it's beyond what you can even imagine. People just know you. It's so crazy. People I haven't seen in 10 years and they watch my videos and they know me and they know what I've been up to. And I have no idea what they do. Or I almost forgot about them, but they're like, oh, I know. Now you're doing Lobster Capital in English and blah, blah, blah. Like, yeah. So the power of content is insane. But because my content was all in French, no one in Silicon Valley knew who I am. Knew who I was. That's a big problem. Like the center of my world for investing is Silicon Valley. It's not France at all. Turns out I'm French. I started in France. Okay, cool. And of course you have the sunk cost fallacy because the channel in French is doing so well and you've made so many videos and blah, blah, blah. You keep adding and adding and adding. And I had started an English channel years ago, but being on YouTube takes a lot of time and effort if you want to be consistent. And so I published a few videos and then I couldn't, it was taking too much time. So finally, probably much too late, I decided to completely abandon the French channel and switch to English. And I've created 2 channels in English. One is just the YouTube channel, but there's also the podcast that has its YouTube channel for the video part of the podcast. It's also on Spotify, Apple Podcasts, etc. So it's crazy because I'm very happy about it. Of course, there's many more people in the world that speak English than speak French. So the audience is bigger. It's hopefully a channel that's going to grow much faster and bigger. And I also keep thinking, and it's a fun thought. Like, oh, what if I started in English from 2017? What if these 1,000+ videos that I had published in English at the time? Like, can you imagine where I would be? And of course, there's no point in rewriting the past. It is what it is. I'm coming back with a lot of experience, so this time is going to go much faster. And at least I did the switch. I could be stuck in French for the next 10 years. So yeah, new business and new content strategy. But I couldn't be more excited. And yes, it is going so much faster the second time around because I'm bringing all my experience. I'm just having so much fun, man.
Yeah, I love it. You could have been the Harry Stebbings 2.0 potentially. But yeah, I think our stories really resonate and align because I actually started content creation 4 years ago in Dutch as well. And soon I figured like, hey, the Dutch market is so small. And if I go to France or to Germany, they speak a completely different language. So it doesn't make sense to build an audience and distribution that you can't leverage if you want to scale. So I also started switching to creating content in English. And I remember in 2020, 2021, I started creating short form video content. And a lot of people were I don't hear it a lot with you, but normally French and Dutch people, they have a very strong accent. So a lot of people were like, oh, why don't you just create content in Dutch because you have a very strong accent and maybe it's better and easier to listen to as a native speaker or whatever. And I'm like, I completely understand that, but that's not contributing to my business and where my target audience is. And also regarding the Angel Syndicate, I also started an Angel Syndicate to deploy in companies founded by celebrities and creators. But these celebrity founded brands, they're sometimes the hottest deals in the market, so they close within days, not weeks. So I didn't have time to get $5,000 tickets and put them all into an SPV, and someone is on holiday and someone is not replying or whatsoever. So that's also one of the reasons why I launched the fund. So yeah, it makes a lot of sense.
Big similarities. I just want to say as well that I think Dutch speak English globally so much better than French people. And so probably for you, you're less cutting yourself from the Dutch audience. Hopefully they can still understand. For me, there's a majority, probably 80%, I would guess, of my French investors who just don't get it. And now, now we have new technology like we have subtitles on YouTube automatically. There's even dubbing that's coming to YouTube, but it's not the same. Obviously, it still makes mistakes and stuff like that. And so I had to cut myself. But again, we come from, you come from Holland, I come from France, but they're such small markets. I mean, France is 4% of the world's population. Holland has to be even smaller, probably 1%. That's nothing. Everyone speaks English. And, we can go into the history of, why is English the number one language in the world and why people speak less and less languages, whatever. But it is what it is. So, yeah, anyway, I'll let you keep going with your next question. I just wanted to mention that.
No, I think that is spot on because the Netherlands is the number 2 best non-native English speaking countries in the world. So, yeah, I think you're spot on. So yeah, we already talked a little bit about Lobster Capital already. Actually, you brought it up, and you mentioned that you invest in the top 2% of Y Combinator startups. Can you tell me more about how you exactly got into that specific thesis and why the top 2% actually allows you to invest?
Yeah. So as I think now that everyone understands, my story took me from Europe and specifically France to Silicon Valley while I was doing the SPVs. Basically, one day I was doing tech investing in France and in Europe. And I was, as anyone can hear, I can speak English decently. So I was keeping up with the US market, but I never thought I could invest there. And one morning, it was really, the light bulb moment, like in cartoons. I was like, wait a minute, I'm investing in tech startups, but the best tech startups are not in Europe. What's keeping me from trying to go in the US and invest in tech startups there? So I took a plane ticket, literally, and got to SF. And, I literally was here in San Francisco and be like, okay, I'm here. I'm going to try to meet some people, talk to some people. I'm here. I want some deals. The good news is the syndicate was already happening. So I didn't show up like with a dream and an idea. I showed up with like, hey, we're writing around 100K per startup, 100K check. So like, hey, we're investors. We have 100K checks to write for 10, 15 companies a year or 20 companies a year. Do you guys want the money? That's how it happened. And some people were like, yeah, sure, 100K, I'll take it. So I started my first two investments were French built companies in Silicon Valley, kind of, the French mafia, I guess. So, I was like, okay, I've invested in two American companies. Yes, the founder is French, but the companies are American. Okay. And then, some people trusted me, some didn't. Some people trusted me, and some people started sending me deal flow and stuff like that. And yeah, I got into some more deals. And then I was like, okay, this US thing is real. Where's the best deal flow? So, knowing nothing of Silicon Valley, I was like, okay, where can I find the good deals? What's the best place to look? And this name kept coming back up. Y Combinator. Like the hottest startups in the Valley are from Y Combinator. And I met a very big angel who had a syndicate in the US as well. And he was very big, and he was one of the very first investors in a very big YC company, a checker. And, he was doing really well. Like, oh, yeah. And it was like, oh, impressive. Oh, it's a unicorn. He's like, yeah, of course it's a unicorn because it's a YC company. He's like, what is this YC thing? YC was very closed environment at the time. I think it's probably a little less today, but still somehow probably. And yeah, it was very hard, to answer your question, to just try to get to have a seat at the table with those startups. I made it my life's goal, professional life at least. I really wanted to get in, tried everything possible, just spend time, hang out, try to help founders, even if I didn't invest, just try to be there, try to be in the ecosystem all the time. And it started working, and I started making a few deals and being invited to demo day and stuff like that. It was not the best. They were not the best startups probably at the time, but some of them did okay at the beginning. And so we kept being invited, and people were like, oh, you invested in this and this and this. Okay, I know them, and et cetera, et cetera. So that's the answer to your first question, how we did it. It was very gradual and slow and painful and difficult. And someone, came up to me, I don't know, last year, and was like, oh, you have access to YC. Like, how did you do it? Can I just teach me and I'll do it? I was like, okay, well, if you have 10 years and a lot of perseverance and persistence, but it's not like overnight. So that's the first thing. The second thing, why would they let me invest now, the top 2%? It's a number of things. One is the media that we're building that I mentioned. They want to come and be showcased and have access to all the views that we have online, and we're sort of the number one independent YC media now. By number one, I mean just biggest. So it's always cool to be mentioned here. We just published an episode today, and the founder shared it. It was like, oh, I'm so honored to be on the show. It's like, oh, come on, but like, I guess not everyone comes on the show. So today is the first time someone says honored. That's why I'm mentioning it. And then I'm a founder. So like you said, founder-led VCs are very appreciated by founders. Everyone knows it, that a founder VC is different than a finance VC. And I have my reputation. I've invested in more than 100 YC startups now. I'm always here when they need me. I'm always available. I always try to help. I'm not saying I always do help. I say I'd always try to help. But I guess it's, and I help them with my experience as a founder as well. So, the media plus the reputation and the network. And, it's been years now, so I know a lot of people in YC. And then there's an internal YC rating tool as well, where investors are rated, and my rating is good. And so they come here and they say, okay, he's a good investor. So yeah, that's a lot of all those things.
Very interesting. And then, yeah, you shifted from like this angel syndicate model to your debut fund, Lobster Capital, of $12 million. So how many of the LPs or commitments actually came from the initial French audience that you built, or content in general?
Yeah, quite a lot, honestly, because it was a small fund, I accepted smaller checks of 100K, and it's 100K spread out over, I don't know, 3 years. sort of easy. I mean, depends what means you have, but it's 25K at a time. So yeah, many jumped on the opportunity. Honestly, everyone who could did, because they were very happy with my investing. The ones that didn't just didn't have the 100K, because it was open to anyone. Some people invested with me that had 10, 15, 20K to invest, but people who did had 100. So yeah, it's a lot. Now it's a lot in numbers. It's not a lot in amount, because it's almost always 100K at a time. And there's a few exceptions who invested more in 2, 3, 4, 500K and more, including from that group, but it's a minority. So I didn't do the math, but it's on the first fund, it was for sure substantial and meaningful. Now that I'm raising a second much bigger fund and my minimum check is much higher, there's going to be still a few, the ones that have the bigger pockets, but it's going to be much, much smaller. So now we're developing a new relationships with new investors.
Yeah, very interesting, because like you can kind of see that content is helping you with like LP commitments, but it also helps you to win deals, because these startup founders, they understand that you actually bring value, because you can actually put eyeballs on their companies, and that is something that traditionally they have to pay money for, or it actually the startup finds you, so you actually have the best deal flow. You're not the first like investor that's building that built-in audience and distribution. Like Harry Stebbing, obviously with 20VC, is doing really well. Andrews Horwich is building their own media platform. Do you think going forward more investors and VCs are going like all in on distribution and building content?
Yes and no. I don't think it's going to surprise anyone if I say that almost every VC now has a podcast. We've all seen it. They all have a podcast. And so that's why I say yes. I guess a lot of people understand that media is key. The problem is 99% of investors or funds that I see do it wrong. They just don't know how to do it, don't have the time to do it, don't have the resources to do it, and they just don't do it well. Most of the podcasts from VCs, you look at them and they get 20 views or listens, and that's it. By the way, we don't get 10 million views every episode, so like it is what it is, but at least for us it's trending up, and we already today get 1 million views per month, but it's going up pretty quickly overall. So I think everyone gets it, but being a VC is super hard, and you're always very busy, and to find and allocate time, serious time for this over the long run is very difficult. I'm lucky that I'm sort of social media native. I've been on YouTube since 2017. Even before that, I've been on social media. Very early, I was on social media on Facebook and Twitter, and very active there with, thousands and thousands of followers on both platforms. Like I've been doing this, I don't know, almost my whole life or whatever, and my whole adult life for sure. So I get this. That's where I think I have a big advantage. So yeah, I mean, I think a lot of people realize it, understand it. Do they do it well? Probably not. Are more people going to take it seriously and do it well? Probably. And also, it's also a matter of how much money you throw at the problem. When you're a very small fund, it's very difficult to do because it's a lot of time and manpower. But when you're a $1 billion fund and you can throw a team of 5 or 10 people at it, then even if they're not great, they're going to figure it out and you can get decent amount of views. I wish I had a team of 10. I don't. But so yeah, it's going to increase over time for sure because it works. Harry Stebbings raised the biggest European fund. It made headlines. Lobster Capital is making headlines as well. And, we're definitely not the first, but we want to be one of the best. But yeah, there's going to be more for sure.
Yeah, and I think content creation is also a full-time job. And a lot of people kind of mistake that. They think like recording a podcast is just 1 hour per week and they do an interview and that's it. But there's so much that come with it. And eventually it's also a game of quality over quantity. Like the world doesn't need another podcast where not a lot of information is shared or in the wrong format or whatsoever. So I think the funds or the startup founders in general that create the best content and have like a real strategy behind it are going to win no matter how many others are going to try it.
Yeah, you're right. There's so many, I mean, thank you for mentioning that. There's so many podcasts where like, what are they even talking about? It's just, there's a guest who tells, well, I started at Citibank 20 years ago. It's like, what? I'm, again, not that we're perfect, and I guess you would not call yourself perfect either. No one is, but yeah, I'm when we're doing a podcast, I'm sure you as well. We're always trying to think, okay, what is the audience learning? What would they tune in? What's in it for them? What are they learning here? So I try to take people behind the doors of the YC ecosystem that's pretty secret and that a lot of people fantasize about, and like I try to get them behind the doors and show them how it is. That's my thing. But many podcasts, you don't really know why they exist.
Yeah, I love it. What's next for Lobster Capital? What are you most excited about?
I mean, we're raising a second fund that I'm not allowed to talk about given the regulation, but it's, very exciting. We just doubled down on, what's exciting for me is just doubling down on everything that works. So we're doubling down on investing in the best YC companies, and we're doubling down from creating content and becoming big and bigger media and just, showcasing YC founders, telling stories. Yeah, that's it. We're very exciting. The first fund was massively oversubscribed. It's looking like the second one will be as well. That's it. When I found this, and I'm going to be doing this for the next, 40, 50 years.
I love it. To end, my final question, what is your number one piece of advice for investors who are thinking about creating content?
Number one piece of advice for investors to create content. I would say, because I've seen so many podcasts that are just such low quality because they don't take it seriously. So I would say really take it seriously. Make it a core part of your business if you want it to have an impact. Otherwise, just don't do it at all. But take it way more seriously than you're taking it right now. Because again, people just, probably just like you said, they show up an hour a week and just push to YouTube and that's it. They do nothing. It takes much more than that. Yeah. That's probably the biggest mistake I see. So that would be my number one advice.
Yeah. To end, where can people find you or reach you?
Everywhere. We're a social media company. So, I'm on LinkedIn, on X, YouTube, Spotify, Apple Podcasts. Wherever you are, we have a Substack as well, lobstercap.substack.com. So wherever you guys, listeners, consume content, you can find me there. Yeah, feel free to reach out.
Yeah, I will make sure to put your links also in the comments. So Gabriel, thank you so much for being on the show.
Thank you, Scott. That was awesome.
Thank you for listening to the Hot Start VC podcast. If you enjoyed this episode, make sure to subscribe and leave a rating or review. It really helps us grow. You can also subscribe to our newsletter at hotstart.vc for more breakdowns on how celebrities and creators build billion-dollar brands. Thanks again for tuning in, and we will see you in the next episode.